Good morning, friends. Welcome back to the pre-market sit-rep. So today is 22nd November 2022, and it is the 57th episode of Pre-Market Live. So we'll analyze Nifty and Bank Nifty futures today. We'll see how the day has been yesterday and how it is going to be. Welcome back to the pre-market sit-rep. So I keep forgetting about muting that. Sorry about it. Well, so yesterday Nifty was a bit harsh. We opened with a big duff bar. So this is called a duff bar. So you need to have a strategy to trade around it. However, immediately after 10 minutes after the open, what happened is the market died down. That means the market in Nifty, there was a huge selling pressure right in the first 15-minute bar. And once this is done, so entirely we have gone sideways on a mute mode, and this is only basically noise. So you see that entire day, the market has been moving here and there. So this is the reason why I said in this low VIX environment, we should be very careful if you are an intraday trader, or for that matter, even if you are a scalper. Okay, so you need to see what is the kind of ranges that we are looking at. If we do not get a range, you should not, remember this, you should not get into the market often in this market. It will blow up your account slowly. So low VIX environment is like a slow poison. So you will end up over trading the market, because every up move you will think that the market will break out. Every down move you will think the market will break down. It will not happen. So it was a slow market. So one of the best things to basically sorry about it, one of the best things to master intraday trading is understanding what is a fast and what is a slow market. So basically we'll discuss this at the end of the video. So I discuss such kind of general concepts at the end of videos. Let's first get the market analysis down. So sorry about the notifications. So yesterday the market was, oh my God. Oh, just a minute, guys. Just a minute. Sorry about it. So so once the duff bar could not, you see that the low of this duff bar did not break. So in days like this, so basically I train my students, whenever you see duff bars like this, have some very good parameters. I have done a webinar a couple of months ago, how to trade these duff bars. This is a wonderful setup. Basically setup means, in this, the duff bars told me that there is no trade today. As long as we are breaking this, no trade. And as long as we are going down, no trade. So how do I see whether we are not breaking down at these levels? This is where I depend on market profile and order flow. So you need to understand the first that it is a low volatile market. So in a low volatile market, you need to see what are the variables that help us in controlling over trading. So over trading is the biggest enemy of any trader. Okay, once you stop over trading, nothing is going to hurt your trading business. Okay, now let's look at levels in Nifty. Yesterday I told you that 260 is a level below which the market will remain negative. So I continue to hold that. If we break 260 today, then only we are going to see any kind of meaningful momentum on the upside. Otherwise, this market is only going to the downside. Let's look at daily charts and see what is happening here. So let's just draw a small Fibonacci, so that we know where the levels are, where we can take a support. So this is how you look at. So this is what I mean by a very high risk zone. That means long should be very careful here. See, if we have to fall, this is the first point of reference. in terms of Fibonacci. I'm not saying that immediately we'll come here. We'll come here. So I'm not saying that. So for that, what you have to do, you have to draw another Fibonacci. For example, we'll take another Fibonacci level. So we'll just draw from one of the swings here. So you see that. So basically we have taken support at around this Fibonacci level. So this is what it is going to be. So 18148 is the level where we are going to take support today. But yesterday I gave you this level 151 or 161. So basically once we come below that level, it is going to be a panic. So now our next reference will be 17,934. And also you see that the short term and a fairly bit long term RSI is kind of nearing. That means the kind of energy that this market was holding is coming out. The steam is coming out. Basically, it is like your cooker. You cook food, and after you switch off the gas or energy, what happens? The cooker will take some time to let out the steam. That's why you see that you open the cooker, the steam will be out. Okay, I'm just using a metaphor to help you understand what I mean by this small kind of indicator that I generally use to look at whether the steam is building up or whether the steam is building down. For example, you see that here the steam was like building up and suddenly the steam kind of built up. So all these days the market has been holding that steam. Now once the VIX starts rising, the market is going to let out of that steam. Very important. So I use various tools to understand the market dynamics. We need them. So nothing is waste. So especially Fibonacci is one of my favorites. So you see that once we break this 18148, you will see in live market how we will veer towards 17,934. And then this zone, I will call this a very powerful zone because we have a Fibonacci confluence here. We have a Fibonacci confluence here. So on a daily time frame, we have to keep looking for these levels. If I break 18148, I should be very careful about taking aggressive longs. I'm not saying that you should not go long, because when you are taking a trade, first thing you have to fix up is what is your time frame. Okay, if you are an intraday trader, don't look at the outside time frame, but if you are a swing trader, you have to look at daily and weekly time frames. You should not look at the intraday time frames. Whatever happens in intraday time frame, you have to take the positional risk that you can bear. Okay, but I am primarily an intraday trader. I trade every day. I want my capital to be safe, so I trade every day. If there is no trade, I don't trade. Like that, you have to be very, very careful. So this is the zone of support we will be looking at. So today is Tuesday. It is a Fin Nifty expiry. There is a fair chance we will fall down because I see a kind of steam compression. I call this steam compression. That means the steam is slightly going out. So suddenly when the steam is out, you open the lid. What opens when you open the lid? You get some steam basically out. So like that, the market will fall down, and then we can see these levels. This is the support. So 17,826 is the level that I look for as a support this month. So if we break that, then we will this is one step at a time. I will not be worried about these levels or these levels now. Okay, only when I cross through this, I will reassess how the market energy is getting built up. So this is what is happening in Nifty. Sorry for the voice break, guys. There was some tech issue. So let's look at Bank Nifty. Let's look at Bank Nifty. So in Bank Nifty, similarly, you are seeing how the low volatility environment has been fueling up this move. Okay, so we are rising, we are slowly rising, but there is no pumping up of the energy. That means you need the momentum to be pumped up. You see, whenever there is a kind of nice rise, you see how the steam should grow. That means you need the pumping up. Suddenly you see that. So whenever there is a less margin for a rise and you see a deep fall, you see that. For example, what I'm trying to show you here is with this kind of indicator, a momentum indicator is, you see that how the steam is building. Okay, and you see a small fall. Even if the RSI fell badly here, there's a small fall. However, when the steam, that means when the spread here is very small, you see the kind of after impact that we have. So now you go back and see why I am worried about the downside these days. It's not that I'm kind of scared about further rise. I'm not scared about further rise, but whenever the steam is whenever the spread is very less, we can see a major fall. Okay, where we will fall, that depends on the intraday auctions, how the market develops and how the option market prices in various volatilities. So basically here we'll be looking for a decent fall here. How do you assess that fall? How do you assess that fall? So we will just look at the smaller time frame. So basically this is at least a level. I'm not talking about intraday. That means I'm not saying that we'll fall to 40,600 right away. I'm just showing you how I analyze the daily time frames. I'll keep that in mind. And on intraday, I'll start looking at what are the levels that I need to look for. So basically in terms of market profile, I look for, this is the balance area and this is one balance area. So basically I'll be looking for somewhere around 42,000 as the level that I should look for in this week's expiry. Basically this is a monthly expiry as well. So what we will do, we will take a smaller swing and see how what are the levels that I should look for. So you see that we have 41,572. So basically if you draw this as a balance, if you draw a rectangle instead of this, so we'll draw a rectangle here. So this is one balance zone and this is another balance zone. So basically, this week we may fall towards this level because compared to Nifty, you see that Bank Nifty has a pretty decent margin. So we have a decent margin between these two lines. That's why, you know, the fall may not be great in Bank Nifty, but in Nifty, the fall can be very severe. And you saw that in intraday yesterday. So that's why. So if you want to take any kind of aggressive trades, Nifty is better, but Bank Nifty is safer now. You see that the falls are being very small. So now let's look at intraday charts. So I have given enough positional understanding. That is on a daily time frame, we have seen what are the levels that we can look for. So basically, I'll be looking for somewhere around 42,000 as the base immediately for the immediate level. After that, we should look for 41,000. So this is how the market is building the risk on the downside. Now, let's see what our intraday charts are saying. Let's look at market profile charts, so that we have a very good idea of what happened yesterday and then what happened today. Now, yesterday, you see that I gave you a level in our yesterday's pre-market setup. I gave you, this is the level. So 18,260 is the level I gave you. I told you that below that, you know, the market will just collapse. And that's what happened. However, what happened is buyers came at the bottom. You see that how nicely they have kind of taken out inventory, and you see the kind of volatility in the market. So basically this volatility indicates that both buyers and sellers are still not able to make out which direction they should control this market or where they will find enough liquidity. Basically, large players are always looking for liquidity and they will always go to zones where there is easy liquidity. So today, I see that, you know, kind of we can further fall down to this virgin point of control in market profile. Virgin point of control is a very important term. So we can fall towards 1805. However, if the market has to go up, we have to break 18,260 first. So until then, the market will form a range here. So on our daily time frame, if we go back to our daily time frame, we'll check, we'll see how this chart is kind of behaving around that level. Let's take it Nifty. Let's take Nifty in a daily time frame. Yeah, you see that 1805, sorry, 1805 is the level that we have marked. So, or let's take a 5-minute chart and see how it is. So you see that. So 1805 means this is the level that we should be looking for. So we will break 18140. Once we break 18145, so this is the zone. This is the zone that market profile is showing as the level where we can fall down. So you can keep a margin of 18050 where if there is a downside today because of fin Nifty expiry. However, if the market has to go up, you should ensure that it is going or breaking 18280 at the least. 18280. Let's look at intraday charts. It is breaking 18280 or 260. So these are the levels we have to be taking care of in Nifty. Let's look at Bank Nifty. Let's look at Bank Nifty, what it is suggesting. Yeah, as I told you, compared to Nifty, Bank Nifty is in very, kind of nowadays it is behaving better. That means better in the sense it is behaving like an old person, but Nifty is behaving like a young person. Earlier, like before October, when the VIX was around 16, Nifty was behaving like an old person and Bank Nifty was behaving like a young person. So you can go back to charts and see that. So what I mean by young person and old person is, a young person is very volatile. He doesn't know what to do. He will do everything. But an old person is like, sitting, like you see in Bank Nifty, yesterday you see that how small the volatility was. That means the volatility was not great like in Nifty. You can understand. I'll look at the candlestick chart also in a while. Let's see this, how indecisive price action is. It has made an initial balance and then it has stayed within that level. Done nothing. It just sat at home and kind of enjoying. That's what an old person will do, right? So this is what is Lovix doing to Nifty and Bank Nifty in different ways. Let's look at Bank Nifty there. You see this, as I told you, Bank Nifty is very less volatile. So that's why you have to be very careful in aggressive trading or aggressively scalping Bank Nifty these days. Be very careful until the VIX changes its scheme of things. Don't get irritated. That is very, very important. The moment you are irritated, you are going to kind of pain yourself with a lot of damage. So on a daily time frame, we have to look for 42,000 is the level that we have to check for on the downside. On the upside, let's look at 5-minute chart. On the upside, we have to break at least these levels, 42,550, or let's go to market profile and see what are the upside levels that we have to be taking care of. You see that here it is a very nice way. So basically, this is the zone which will act like a resistance now. So even if the market opens or gaps up, it may kind of take time to trade this, and only about 42,490, only above the value area high, or even this point of control at 42,535, we'll see upside. Otherwise, the path of least resistance is downside in both Nifty and Bank Nifty as of now. Now, what are the levels on the downside that we look for? So we have a virgin point of control right below this. So 42,180 is one level that we should take care of. And yes, and this is 41,960 is another level. So 41,960 and 42,180 will be the levels that I will be looking for in Bank Nifty if I am trading. So that's it for today, guys. Hope this edition of pre-market setup is good and you have liked it. You have learned something new. That's what my intention is, to teach something new every day and stay in touch. Have a great day, guys. Bye-bye.